Okay, guys, welcome back. Now it's the part two of today's sharing session. We will now look into Bitcoin as requested from Susan Tan on the market. Yeah, let's take a look. Okay, so let's just go through this Bitcoin and how to interpret the chart. Okay, first of all, you will notice that on my screen there is no diamonds, so it's impossible not to have diamonds. All right, so if you look at it, you move right and left. Oh, sorry. Did I share my screen? Okay. Okay, this is the excuse me, this is the diamond chart. Yep. Okay, thanks, Peter. Forgot. Okay. Okay, so when you see a screen, you notice that no matter how you move it, there's no diamonds, right? That means the diamond didn't come together. So right click, refresh. Okay, the diamonds will pop up. Okay, so what happened? Take a look. Okay. So if you want me to interpret this chart, I'll explain to you how does it work. So first of all, you have the opening price of the market with the MLP. So the market is staying above MLP. So this is the buy signal. The KSI, as you can see, is increasing. So today for Bitcoin to buy is okay. So straight away I can know that today buy will be a better choice because of the KSI. Then I also noticed that the KCX, the so-called extremity, is actually here. So come from this guy here. So which means that the market seemingly there is a bottoming out signal around this area for Bitcoin. Okay. So with that understanding, the upside itself, if today, if it breaks above pivot one, it may have the next challenge towards the MA30. Then if MA30 breaks further, then we have the KCB at 101,734. Okay. So that's how it works. Now, if you notice from the right to left, the nearest diamond is here, and this is called a stacked diamond. Stacked diamond means that the diamond itself, the one diamond and the four diamond come together. Now, why did it happen? Okay, so why is a four diamond? So first of all, if you look at the screen, there is a KCX before that, a KCX before that, right? So that will give you the first blue diamond when you have a color change. So there's a CCRY. So the CCRY will warrant you a first blue diamond. Then why there's a four diamond? Because this particular candle is yellow in color. There is a change between red to green. There is a change from blue to black at the same time. So that's why you have the four diamonds. So the four diamonds and the one diamond comes together. You have a stacked diamond. And if you notice on the screen, there is a color change CCRY, which comes with a KSI green. So that's why you have this KCL over there. Now, if you have noticed that, that means that in this case, the KCL is a line that basically rested on the closing, which is the same thing as you saw a diamond, you put a line there, same thing. So you don't need to go and put another white line there because it's the same thing. So that's the reason why the next day, once the market opens, touches the market, the KCL line, and so-called the white line, you can know that on this particular day, it's a very good day to buy. And of course, the market really shoot up. Now, for those who remember this, when it was at 96,000 area, that was where I called for a buy on the Bitcoin, and I say that it will go to 102,000 first. Then the next target is 108,000. Remember, I said that first 102, second 108. So really, the Bitcoin shoot up accordingly. Right, if all clear, press number 14, 1, 4. Okay, now you notice that there's no more new diamonds, right? And the line extension for this KCL is only for 5 candle, One, two, three, four, five. Five candles. All right. So because of that, you notice that if I put a line now at the closing price of the four diamonds, you will notice that the market has went up, then came back down, and now incredibly it's back to where we are. We are back to where we are. Can this be used? Yes. As long as the market tap the line, there's no new diamonds available, this line becomes the artificial support level. So that explains to you why on this very day, when the market opens here, it came all the way down. Do you notice that this is where the support level is? The market stayed there perfectly. Then the very next day, the market breaks below here, and there was a huge sell-off on the Bitcoin. But if you notice, while the Bitcoin was selling, the KSI was reducing. That means that the market is bottoming out soon. And then you notice that at the same time, there is a KCX turning green. So all this information tells me that we are near a bottom of the market. So when the market reversed course and went back up again, Bitcoin from opening price shoot up all the way here itself. All right, so all these can be explained from the indicator. If all clear, press number 15, 1-5. Okay. Okay, I'll do S&P. No worries, we are ahead of time. Okay, all right. If you're not, I'll do that for you. Okay, so before I do all the coverage on the S&P, I'll give you all now a few moments to take a look at the S&P to understand now how the system works. Okay, Susan has a request. For those who are not in a Crazii community Facebook page, you can PM me your Facebook name as well. Okay, so you can find you and bring you in. Yeah. Okay, everyone take a look and you will now understand how the system works better already, right? Why the lines are there, why sometimes the market stays up, sometimes the market stays down, all this. Okay, right. So let me just go through now. So first of all, you have a color change from red to yellow with the KSI green. So that's why you have a KCL line at 6057.5. Okay, so that's the first thing to take note. So as long as the market stays above 6057.5, you can see that the market really go up. But once it loses 6057.5, you can see that's why yesterday we have a huge sell-off in the market. And yesterday, the KCB is very near 6008.1, but because the low itself was 6010.7, so the market misses the KCB by a bit. So that means that by right tomorrow, by Monday, there is a potential follow through to go down towards 6008.1. Yeah, it's actually possible. With the closing at 6020, that means that the market has about nearly 12 points downside on Monday. Okay. And the KSI itself, right, there's nothing much, nothing really big in the difference. But interestingly, you can see that the price of the market is down, but the KSI is green. So this is interesting, right? So that's why I say again, our KSI got nothing to do with the price action. Okay, nothing to do with it. Now, yesterday, the reason why the Dow Jones came down was because of the CPI data was basically better than expected, higher than expected. That created some inflation fear in the market, and the unemployment data seemed to be good. So it become like a bit both somewhere is wrong. So that's why the market decided to take profit yesterday. I'll cover this more on Monday. Okay. Does the extreme bring blinker say anything? Extreme blinker? You are referring to this one here? This one already has a bottom out signal back then. That's why the market went up. Yeah, nothing else. Okay. All right. Now do take note when the market is bullish, the blinker itself is most powerful. When the market is actually bearish, right, the opposite will come in. So you need a diamond to give you the guidance to draw the market downwards. Yeah. Okay. So you can see that over here, whereby there's a color change, right? This part here, CCRY, right? Okay, the KSI was green, but the market, the KCL line, when you draw, you can see the market cannot stay above the KCL line. That's why the market sell. That's why the market sell. But when the market is above the KCL line, the market goes up. Very nice, very beautiful. So same thing here. This is what happened, right? When the market is below KCL line, the market sell down very badly. Okay, yeah, got it. Okay. Is there a red diamond for the bear? Is there a red diamond? No. Actually, right, Vincent, if you notice what you're hearing me, okay, you will notice what I'm trying to say. Is this right? When you have a market like this, whereby you have a CCRY with the KSI green, right? So by right is upside, right? But I added one thing called the KCL line over here. So you notice that if the market cannot go up, then the opposite will happen, which is a sell. So you don't need to have specifically another blue diamond, another red diamond, or green diamond to tell you market will go down. In fact, no need. The opposite is true. So when the market stays above the line, you just buy. But if the market stays below line, it's a sell. Now, why is that so? Because I kind of realized that the market actually, right, 80% of time the market is generally going up. And right, even a bull market, even a bear market, there are more recovery trades. And because US is a Ponzi market whereby they have to really push the market higher regardless. So that's why I kind of realized that you don't need another signal to tell you sell or buy. You use the same signal to tell you what to do, and you focus on the buy side. Now, if the market not stay above the line, then it's a sell already. You understand? So that's why you see when the market is below the line, you just have to sell. Don't care, don't bother. Yeah? Because generally the market is a bull market. Generally, anything is a bull market. That's why when you have this sort of sell signal, right, it may confuse a trader. So this line will be good enough as a trader. So yesterday, you can see that initially the S&P 500 went up first, right, because it stayed above the line. But once, right, it goes up and then touches near the pivot, couldn't really go up, and then come back down, break the OP, and below the line, don't need to wait, just short the market. Don't care, don't bother, just short the market, you make your money. So you can be a seller in a bull market. That's what I'm trying to say, yeah? Okay, Peter. Usually, all traditional indicators do not reflect correctly during the news impact. May I know how the crazy indicator potential work? Okay, that's a good one. Now, okay, I come there. Okay, so first of all, right, no indicator in the world can give you news in front. No way. Right. If there's any indicator that give you news in front, right, that means that there's some leak in the market. And there's a leak in the market, usually they'll cover it very, very fast. So I don't think there's any indicator. You can have this thing called divergence. That example, when let's say people have to speculate, okay, I can give you an example, yeah. Let's say now Friday there's a result coming out, And then Monday, Tuesday, Wednesday, you kind of realize that the market is not moving up as it's supposed to be. And then you can see the indicators are not getting the sort of strength signal that they're supposed to be. That is called a divergence. And when that is a divergence, people can speculate that maybe Friday's data may not be fantastic. So people may take the cautionary mood to basically look to sell than to buy. And then on Friday, the data come out, it's really not good at all. The market sell. Then if you say, oh, this divergence makes sense, see? But we have seen so many incidents whereby there's a divergence in the market and yet the market still go up. So it's not a 100% thing. Now for our system itself, right, we have the big boys tracker, which is the KSI. So we can generally know that maybe we know some information. But again, I stress the key is the opening price of the day. Once the market stays below opening price of the day, that means the market want to sell on. And if you know that there is this KCL line that is telling you where the key point is, then once it's below OP, you just have to sell, and then rather than to wait for things to happen. So I'm not going to lie to you, Peter, to all of you. There is no indicator in the world that really can predict the boys buying selling. Ours is just give a reference point, but still end of the day you need to use the OP price as a guide to trade buy and sell. But then because of the extra information on the KSI or KCX or the KSCL, all these information added on, I can basically throw a heavier punch or lighter punch. Okay, got it, Peter? Yeah. Okay, then what is the star in the chart? Okay, we know this is star is because it's a doji directional day. When the candle body is 20% or lesser than the entire wick, WICK, entire candle wick, then they will be created as DJDD, meaning doji directional day. So yesterday was a doji, so today, which is Friday, is a directional day. Now, directional day can come two ways. Basically, it can be open and then go all the way up, or open, go all the way down. But there are times whereby it open first, go all the way up first, then plunge all the way. Or there are days whereby it may go down first, then pull up all the way. So usually when you see DJDD, you must watch the OP very carefully. If it stays above OP, just stay buy. If it's below OP, just stay sell. Okay, so that's why when you see a DJDD on screen, be very careful, because some people, right, they may buy in the morning and they think they're very comfortable, they think that's okay, then come back last night, get shocked in their life because the market reversed. So DJDD is a good thing to follow, but also will give you some problem if you don't follow the OP throughout the whole day. Yeah. Okay. So I can't. Yes. Okay. Anyone on the mic? Okay. I got you. Okay. All clear. Okay. So now I want to show you the 5-minute chart, and then that will wrap it up for today's training. Okay. Let me go 5-minute chart right now. Now, some of you may ask this question, Kel, your indicator itself, can you use it on M1, M5, and the rest of time frame? Now, guys, my indicator is not the general indicator whereby you can put it in multiple time frame and technically it will the same. I want to be upfront with you. I don't think any technical trader will tell you that the same technique you put in M15 will work at the same as M30 and so forth. To me, it doesn't make any sense because it is not supposed to be like that. So for me, I have back tested the 5-minute chart and the day chart for you over the years. And I tell you the 5-minute chart is very good for short-term trading. If you can understand how to use 5-minute chart, good enough. Now only for Hang Seng, you go to M1, because Hang Seng, the volatility is faster. The time to trade is shorter. So that's why we had to have 1-minute chart only for Hang Seng. The remaining itself, right, try not to even bother with that, yeah? Okay, so clear? Okay, so now how do we see the gold market as of yesterday? How do we trade, right? Let me show you step by step, very slowly. Okay, so first of all, guys, there is no need to trade in the morning for gold if you don't need that, because morning the gold very, very, very slow. But of course, in this case, yesterday, once the market above OP, by right can buy. So KSI is green, KCX is also helping you, so all is good. So the first target event was MLP. Now MLP is a dash dot dash. Okay, it went up above MLP, right? So by right, it will march towards the next target, which is KTR plus 1, then followed by pivot 1 itself. Okay, so all these trades, I've done it live and showed it to you already. Okay, so all these things are very simple things you all went through. Okay, now this is where it get interesting. Everyone follow me now. This is very important. Follow me. Okay, so first of all, you see a blue diamond here, right? So by right, you place a line at the closing price of the candle. Remember, it's always the closing price, not the high, not the low, not the open. Yeah, don't get yourself confused. Okay, so buy right, the market above the line should buy right. But the problem is that, okay, you notice the bottom of your screen, the KSI, most of them are red in color. So which means that this buy are not very safe. So next bar, once it goes below the line, you can straight away, you can see the market plunge down. So if you put a stop loss here, it's kind of expected because you were wanting to go up. But then if you look carefully again, this line, although it's available in the market, but then the KSI is red in color. So the upside, you can see, is kind of limited. Okay, so that's the reason to explain that. Now, after that, there's a new diamond coming up. So originally, there's a diamond here. There's a white line, you place it here, right? Okay, so now new diamond appear, you take this white line, you push it down to where the next one is, which is here. And once you place it in, almost instantly, you notice that the market stays above the line. Right, then to play safe, you can put another line just to put it at the closing price of the candle, yeah, the one that just shared with you, another closing price. Now this time around, you notice the market is ding dong, ding dong, ding dong, ding dong already, right? Okay. So after that, what happened? You can see that the market goes sideways, but because it's above opening price, there's no need to kill for the kill. And then you can see that once the market basically comes in again, another diamond is there. You draw a line at the diamond, and then you go at the closing price. And again, you get to see the market basically surging up. Okay, surging up over here. So of course you may ask this question, then the diamonds, how? Let's leave it alone until they come back down again. Yeah, let's leave it alone. See? Look at how accurate is that. This is the four diamonds, right, which is here. And then this way it gets all supported and supported again. You see that? Very strong diamond, huh? Very strong diamond. So of course, by right, you can only use this one here, lah, because the latest diamond is here, not this guy, yeah? So it happen that if you happen to leave the line there, then just take that as a support level. But by right, for us, we only have one line on the screen, which is supposed to draw, which is here, okay? So something away. The one should be here, okay? So that means that as long as the market stays around this level, it's fine. But once it basically breaks below that level, you can see the selling is impeccable. So vice versa again, when the market is recovering, it stays above the line, the market will recover. But then it's a new diamond, right? So new diamond, what you do, draw the line again. Take the new diamond, draw it up, and you draw your new diamonds, and you have your new diamonds here. So once again, you can see the next day, the market just go all the way up because of the new diamond that's available on your screen. Okay, so once the market breaks below diamond, then how? So this is this is a four diamond. So it went all the way up, then it reversed course, and when it came back down, you notice that, okay, once it comes down, that was a trip. Then after that, the market started to decline, and then you have the selling wave again. So basically, the four diamonds and the diamond is for you to put a line there for you to draw, so that you guys can enjoy this. Okay, I'll show you another one. It's the Dow Jones chart, so you can understand this better. Okay, let's just take a look. Again, no diamonds because of the screen coming in. Okay, so right click, refresh. Okay, here we go, the diamonds. Okay, I'm going to do it simple for you. Okay, so at the start of the day, there was a diamond here. So you put a line at the closing price. You notice that the market just refused to stay up with you. Refuse. So that means you know that the market got selling pressure already, even though it looks good, looks bottoming. Now there's another diamond here, so you just place another diamond at the closing price. So now you have double line right on top. Obviously, you should know already by now that there's something very, very wrong. And after that, you can see what happened to the market. It basically started to sell down all the way to hit this point here. Now this point here is actually the double share is the OP of the day, right? No, it's not. We came from Yeah, the OP, right? This is OP line. Yeah. Okay. So that is how it works on the diamonds. As long as you have the opening price in place, the next step itself, you just have to follow through. So of course, in this case right now, when the market coming down and you have a diamond here, you put it here, you notice that something very interesting happened. The market started to recognize you, and started to come forward to you, and then after that, things can happen. So did it happen again recently? Well, because the thing is the KCX is black, the KSI is green, the bar is yellow, lightly is perfect. But there's something that's missing as element is that the KCX didn't appear recently. It already passed already. So that's why the market basically can buy but cannot buy big. Okay, so now if you look at it further on the intraday chart towards the end of the day, you can see that if I put a diamond here, the market will sell. I put a diamond here. Sorry, there's something wrong with my mouse here. Hold on. Okay, you can see that the next diamond, I put it here, the price goes down. I put it here, the price goes down. So all these basically tells you that as long as you have the diamonds on place, put the line there. So if the line is placed, as long as market stays above it, you buy. But once it goes below the line, you have to sell. Okay, there's no holding back. All clear? Always use the nearest diamond to put that white line. That is the way to do it. Only that way. There's no other way out. And only must place a closing price. Okay? Now, why is there a arrow here? What's the reason for that? Is it going to be helpful for us as a trader? Now, basically, if you remember, when we traded, right, there is this thing called classic buy, classic sell. Classic sell, classic buy, the main thing about this system is that when the market goes below OP, once it go below OP, right, you can see that the market will sell. Now this one here is because it has tripped the pivot and then come back down. So once it hit the pivot and come back down, you can see the pivot here. The market breaks below pivot 2. Once it goes below that itself, right, you can see the market will sell. The market will sell. So I repeat myself again. Here we have the we have the single diamond. I put it here first as the closing price. Then after that, the market started to come down, and once it came down, close below the pivot 2, below OP, you will have that orange arrow. All right, orange arrow stands for it touches the market, pivot, and then reverse. Sometimes can be touch and go, sometimes can touch and go up higher. So watch out for the thing. So some people thought that, oh, okay, you put a down arrow means the market must come down. Not really. It just inform you that the market has touched the OP and then trade towards pivot 2. So you can see that the market really, really went down. Yeah. Okay, Peter, by placing the white line above and when you place the white diamond already at the closing price, must be closing price. Do we need to for CS to close before entry? The best for safety is actually wait for it to finish, then you enter. But if you know that the market surely will go up or feel it can go down, you already feel it coming in, then you don't need to really, wait for it to close. Once you see it, you can enter already. Yeah. Now the only thing that's cumbersome is that when the market actually has multiple diamonds. So multiple diamonds means what? Usually when multiple diamonds means the market is about to bottom. All right, the market may be bottoming out soon, and the trading has got lesser people involved. So when the diamonds are getting more, right, that means the traders are getting less in the market. Yeah, so that's why you can see this is the back part of the market as of yesterday. Okay, so you put the 4 diamonds or whatever diamonds you have there, and you draw. This is selling. This is selling. This one is selling, and this one is on the verge. Okay, all right, so you can see that we have the diamonds there. So when you see a diamond, let's put the white line at the closing price. That's all. Put at the closing price. That will be enough for you. Okay. Once it breaks below it, you just have to sell. Okay. Yeah. This Iman, you say euro, right? Okay, I can bring in euro in for you. Okay, Iman, so this is the euro as of yesterday. So initially, you can see that the market stays above the line. So that's why the euro went up very nicely. Then after that, there's another diamond here. You draw a line at the closing. The market initially went up, but once it U-turn, you have to sell. And this is a good part, you see. The risk you involve is so much, but your potential reward is about 2 to 3 times. So it's better that you should use the line to trade. Yeah. Okay. So if unfortunately you went in to buy here first, then please don't lie to yourself. Once the market goes below the line, you just have to sell first to protect your capital. All right. I have no back test on how accurate is this, but I think as a trader now, you can actually take a look. So that's why you see on this euro that day when euro was propped up by I don't know which officer. If you see a diamond, you draw a line at the closing price, you will notice that you just have to sell against it. Okay, very, very clear. Same thing here again, there was a diamond here, it's a 4 diamonds here. So it was a double diamond confirmation. You draw 2 lines at the closing price, and then what happened? The market basically dropped below it and bang, the selling came in strong. So once again, when you see a diamond, always draw the white line. They will help you to execute the trade better and you can get more out from the market. Yeah. All right. So is there any more question that you want to ask me? If not, I continue. I already said this one is that for Peter, this is only backtest for 5 minute chart and day chart. So it's available on 50 minute chart, it's available on 30 minute chart, but then the accuracy I cannot be sure because I don't trade that time frame. And the first round when I created the back end analysis, the result wasn't fantastic. Yeah. Okay. Now, some people ask me, Cal, is the impact the same for the stock market that AIMS provide? Yeah, it's the same context. So you see, guys, there is a diamond here, right? Okay, so you place a line at the closing price. As long as the market stays below the line, you just have to sell. Okay, so same thing again on this particular day. There was a 4 diamonds here on this particular day. You just have to take the closing price and draw a line across it. And now you understand why this thing happened. So first of all, the market opens first, then it went all the way up. Okay, then from here itself, only here a little bit, and then what happened? You notice it's a KCL color change, right? And the KSI happened to be green. It's a KCL. So that's why you put another white line across it, right? It becomes double white line. So as long as the market stays below the double white line, no matter what you tell me, you're a seller. Okay? Yeah. Definitely with this KCL line and also plus this white line, these 2 lines together. Remember, KCL line is KCL line. The white line is white line. Different, yeah? KCL line comes from color change together with the KSI. The diamond line is basically when you see a diamond, you put your line yourself. Different, yeah? Okay. If Nigel asks, if above white line can we buy, right? Then can we put a stop loss below the white line and concurrently put a sell after that trigger? Yes, Nigel, correct. Buy right itself, you can actually do that, but the buffer you have to be very sure how much buffer you give. All right, because you don't want to keep on having in-out trades because within 5 minutes it can go up and down. It is possible. So it's more for people who want to see the view of the market, then put a bet. But main thing is that once it's above the line, you just have to be the buyer. Then below the line, you just should be a seller. Okay? Yes, do risk management. It's very, very, very important. Yeah, I will do some example on risk management very, very shortly to show you how do we work on this. Yeah? Okay? Very good. I like this conversation here. Everybody's participating. That is excellent. Okay. Okay, so we're gonna do a little bit on the risk management, and we can end this session today. Yeah. Okay. Can Okay, so let us try this. Okay, this is the goal as of yesterday. So gold basically has a diamond over here. Okay, and then you must put in the white line at the closing price. Okay, so what happened? This is what happened. And this one to answer you, Nigel. You notice that the market over here, wow, keep on flipping at the line, and it keep on flipping. So imagine you had done that buy, sell, buy, sell, buy, sell, buy, sell, right? Your account will burst before you can even make money. So this is the problem with putting at the line on there, unless you're really very, very sure of direction. Right? Why the market been sideways? Because by right above the line can buy, right? But at the same time, you notice the seller from the retail and the big boys are all selling. So because of that, right, the market just couldn't find a direction. Those the market want to go up, the sell boy want to sell it down. Okay, so that is the thing. So finally, there was a breakout here where it's very far, very clear, a breakout, and then you have the price going slightly higher. So based on this itself, right, if you have purchased it somewhere around here, your stop loss, right, if you ask me, yes, the best way is to put it below the line. That's the best because the risk ratio will be fantastic. But if you know the market is choppy, then of course you can put it somewhere around here. So this distance here itself is called a range. Remember range? And a range is basically a entry price to a stop loss. All right, so that is your range. Okay. All right, so if you buy it itself, right? Let's say you buy it and then the price go up by a little bit, you can see some profit. Then after that, the market goes sideways, 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 sideways until it basically broke below the diamond line and then it went down fast enough. Okay, so this trade, a lot of people get caught. They say that, oh yeah, this gold very hard to trade. I understand that. But later part, right, you notice there was there is a diamond combo whereby you have a blue diamond and a four diamond very close to one another within five candlesticks. So what you do is simple. You put the line there. Now this time around the market reacts instantly. Same thing again. You put a line across it. As long as the market stays above the line, you can see, you can enjoy it. So it's that simple. All right. Then of course, if you want dummy that care about anything that to tell me sell signal, they don't have. But for those of PTP train, they should know that this is actually a BNB formation here itself and stuff like that. Okay, but this is just a 5 minute, 15 minute chart. Yeah. I'm gonna go to the 5 minute chart. I wanna find the chart so funny. Wait, give me a minute. Here we go. Okay, so you enter here as a buy, and your stop loss can be placed below the line if you want to. If not, you can stretch down to the nearest level. In this case, it's a white line. If you still want to stretch further, then you can stretch under to the latest lowest point. Okay, there's two ways to do it. Yeah, below the line. Okay, or you put it there. Okay. Iman, where we have a diamond line and the market goes below it, we will sell even though it's above OP, or we wait until below OP. Good question. When you have a diamond line itself, right, that means that the market wants to go up higher, but then it didn't. So by right, you can short below the line, and of course, you can add position when it's below the OP of the day. Then the full impact is there. So you can see on the candlestick here itself, right, guys, you can see that there was a double diamond here. A double diamond, which means the candle must appear within 5 trading bars. So this one is not counted, that's more than 5 already. So when you have that, you draw the line and you draw the here, that's where the market basically goes up. All right, so there's a split here. Now do note that as the market towards the end of the day try to avoid trading, because by the time that happened after midnight, right, the probability of we winning is going to be much lesser because the robot will come into the picture already. So the best time to trade, if you ask me in general, is 9 a.m. Singapore time to 7 p.m. Singapore time. This will be the best time for you to use this time to do anything else, right? Because 9 a.m. to 7 p.m. these few hours is basically where the market volatility is the strongest. The market moves the more what they call more directional. After 7 p.m. to 8 p.m., that's where the news come in, and of course there'll be a lot of trickery in the market. The market will just swing here, swing there, swing you everywhere. So no point. Now you ask me the best deal, obviously, is to trade with the day chart to have the feel of the market. Like yesterday when I did go, it was very clear. I saw the four diamonds appear on a screen, and then I draw a line, and of course my friend let me say it's above pivot one, so it's above the white line. So that's why I buy towards the KTR plus two, right? 2878, and get myself profited, and then that's it. I stop. Yeah. Okay. Yes. Correct. You need some sleeping time for yourself. Okay. Okay, guys, that will be all for today's training. All clear? Is there any more question you want to ask me? So remember, the diamonds, you always use the nearest diamond, yeah? So the diamond that's now have, you have to use it. You don't use it the one long time ago already. Whatever nearest from right to left, you use the latest diamond. Okay, now of course, again, trading hours side after 7 p.m., my personal appeal to use is don't trade after 7 p.m. Really, no point lah. The risk reward ratio is high, and if you make a few days, you may just get back in one single day. Okay, no point. Okay, guys, thank you very much for today. Take care. I hope you guys enjoyed this session. I did my best to come out with my very bad voice, but I hope you enjoyed it. So the recording will be out later after it's being with some editing of subtitles. Then we send it out. Yeah. Okay. So Susan, please make sure you get the people. Most people who is here, please register with Susan. Put there V10.4 to her so that she can register that you came for the class. Hence, they can give you to access to the Facebook. If you didn't do that, then too bad. Then she will not be bothered. Yeah, it's only for now. So by 12 o'clock, she don't receive it. That means that we take it as a non-participant. Okay. All right. Thank you very much, guys. Thank you. Yes, I'll take my voice. I will now take a break. Okay, guys. Bye bye. See you.